Hey everybody, welcome back to Greenspud Trades. I recently discovered the YouTube channel of another stock trader named Scarface Trades. I want to do a reaction to one of his videos where he describes an intraday range trading strategy. And I want to offer my perspective as somebody who does swing trading and long-term horizon investing. I really wish that I could partake in the intraday trading every day like Scarface does, but unfortunately, I have a full-time job which demands my attention during the day, so that kind of precludes intraday trading for me. This effectively limits me to swing trading and long-term investing. So the way my process works is that in the evenings, I do my research trying to find setups on stocks that I like on the daily chart, and I'll place my orders to buy or to sell ahead of time. I just want to show you that there's an alternative way of thinking about the same stock chart and trading it, but with a different time horizon in mind. All right, so let's start the video.
It's a 5-minute opening strategy. All you have to do is mark out the high and low of the first 5 candles on the 1-minute chart that open up, or the first 5-minute candle. Mark out the high and low of the first 5-minute candle. For our entry, we look for when the stock retraces to either level and wait to enter. Therefore, we're only going to enter if the stock comes to either the high or low of the first 5-minute opening range and look to enter. Exit. Look for opposite key level or high of day or low of day. Therefore, for our exit and profit target, we're going to be looking at the opposite level, which means if we're looking for a retrace of the 5-minute low, our profit target will be the 5-minute high.
Okay, so essentially what this trading strategy is he's going to try to figure out what the range is for the day, and he's going to wait for the stock to bounce sort of on either the high end or the low end of that range, and then he's going to take the opposite trade, basically a mean regression trade, expecting it to come back into the range and not do a breakout. If it starts to break out, then he's going to stop out. In which case, he doesn't go into whether or not you should reverse trade or not, but I guess for this particular simple strategy, he's talking about staying within that range and showing you how you could make money just by trading that strategy and having an asymmetric reward versus your risk.
Here we are on Tesla. We're going to be backtesting Tesla over a 1-week period. Here we can see it's Monday, November 27th. So we're going to be doing this till Friday, December 1st.
So he is backtesting the strategy by reviewing the way that the Tesla stock acted on the week of November 27th to December 1st. So what I'm going to do is I'm going to use the Think or Swim backtesting tool, which is called On Demand, and I'm essentially going to rewind what the stock charts look like on that particular day. So right now we time traveled back to November 27th, 2023 at 9:30 a.m. just at the market open. One thing he doesn't talk about is multiple time frame alignment. One of the ways that your setups could be more powerful both for intraday trading and for swing trading is to look whether multiple time frames align. So if you get a lineup of, like, let's say the daily chart or the weekly chart along with the ranges that you're looking at for the intraday, that's a much more powerful setup than whether you're somewhere in the middle of a consolidation range and you're not looking at those longer term boundaries. I'm going to bring up the daily chart right here, and this is kind of what I see. So for me as a trader, I did a little bit of trading in Tesla not too long ago. I was actually watching this long-term downtrend here and waiting for this to break. And it did early in the spring. Once that trend got broken, we had a really nice run here for a few months. And that's the sort of thing that I would look for as a swing trader. November 27th, what do I see? Well, there's a few things that are of interest. One, we're just above the 200-day moving average. So I think that's a little bit bullish. It's got some support right here. However, it's got this convergence here of the 50-day moving average, so that's a little bit of a bearish sign as if it crosses over, but that hasn't happened yet. It's also above this yellow line that I have here, which represents the 13-day exponential moving average, which is a little bit more reactive because it more closely weights the candles that are more recent than the older candles. Now, if I'm going to back up here, I see another long-term trend line that is of interest to me. So let's see here, just crudely drawing this, we've got that. And we've got that. And this would be another range I would expect to be bouncing around on. And the way that I would probably trade Tesla, and Tesla at this time was not of interest to me because it's in the middle of a consolidation range. And by the way, this horizontal graph that I have here is actually the volume at different price points. And you have more support and resistance at the edges of these humps in the volume over time. So as a swing trader, I'm not really seeing a whole lot here, but I do think what would be a more interesting level to trade would be down here around like maybe 208, 209. If it had a nice orderly pullback to this downtrend line. We've also got another trend over here, and it's not quite there yet. It's sort of in the middle. I think this stock actually needs some more time to cook here and kind of figure out what it's going to do. I'm looking for a more powerful move that'll have it break out of the range. But what this guy is doing is he's looking at a regression strategy for the intraday. And I guess if you're looking for like a mean reversion strategy, maybe that's not a bad play here if that's all you're looking for, because you're already in the middle and it's probably not going to break really strongly in either direction until a little bit later out into 2024. When it gets to the end of this triangle, that's when I would expect it to get a little bit crazier going in one direction or the other. By the way, I'm trying to grow this channel so that I could exclusively focus on trading and stock-related content. So it would be really meaningful if you could hit the subscribe button and also hit the like on this video to promote it in the YouTube algorithm. Let's take a look at this on the weekly chart. When we look at the weekly chart, it's pretty much the same type of pattern that we see on the daily chart. Nothing really of interest right there. And what else could I see here on this daily chart? Well, there's a little bit of a range here. It's got this this sort of a box. To me, I see a lot of noise, a lot of randomness. It's not really interesting to me yet as somebody who trades on a longer term horizon. Let's see what Scarface has to say.
Tesla, we're going to be backtesting Tesla over a 1 week period. Here we can see it's Monday, November 27th. So we're going to be doing this till Friday, December 1st. So let's play out Tesla here. Let's play out the first 5 minutes and then mark out the opening high and low. So here's the first 5 minutes of Tesla. We're going to mark out the high and we're going to mark out the low. Now what we want the stock to do is one of two things. Number one, hold this level, retrace, and take another move up, or break this level, retrace, and then make a move to new low of day. Those are the two possibilities at low of day, and then at high of day, same scenario, just inverted. So
I was mistaken when I spoke earlier when I said that he's not talking about reversing a trade. If it does break below this level and then you go short off of this, that would be a reversal of your initial trading plan. So I guess plan A is he's wanting to trade in range where it bounces off of the range and he wants it to go to the other end of the range. And then the other option is that he wants it to break through the daily range and then be down, down, down all day.
And right here, what do we see? We see that the stock moved up, came back down, and now is retesting this low. We need to see a little bit more price action to confirm this move.
Yeah, so let's advance the time here to about 10, 15. So the 5 minute chart updated. So it established this range here, but let's look at what it did on multiple days here. So what I find really interesting on this 5 minute chart is I'm not just interested in looking at what's going on this particular day, but I'm interested in seeing what's going on other days. And if you notice, this 231 is a really strong line. So because 231, 230 is an important level over multiple days, I think this is more significant as a range. And one of the things that you probably could have done is going into the day, you could have studied this chart here and noticed this pattern occurring across multiple days here. And then using the similar strategy to what he's doing here, but just looking at one day in isolation, you could have taken that over multiple days and said, well, I want to buy when it gets down to the support area right here on the daily, on the intraday chart. So you could have entered with a long right here once it stopped going down, because there's a good chance that it probably would have stopped somewhere here around that 230 to 232 level, somewhere in that range. And look, it did. So I would, as a swing trader, I would probably be looking for the same thing that he's looking for, but I would consider the multiple day lead up into that and the multiple time horizon. And what I'd probably be more inclined to be looking for is not so much support, but actually to short it if it were to break. However, you do have the 200-day moving average right below it, which should give it some support. However, as you can see, that doesn't always work for it because it's been wavering around that 200-day moving average. So it's not really perfect. I would think as a swing trader that at some point it's probably going to break down back here to 210, in which case I'd be interested in buying it. So I'm kind of doing a similar strategy, but on a longer time horizon.
Therefore, I can't enter in just on this candle yet. And right here, what we see is we broke up, we came down, hammer candle, we couldn't enter in just yet, and then we see strong buying action. We did not close below this level. Therefore, we can enter into the stock on this candle right here, looking for high of day or that 5-minute high, and then our stop loss here would simply be a break below this previous low. This would give us a 3.72 risk to reward trade. This means to make $1,000 on this trade, we would have to risk $269. So let's play this trade out and see exactly what happens. And there we go.
Yeah, so kind of like I just mentioned here, that acted as support. So it bounced off of it, and then he got a move during the day that brought it to the high of the day.
So just like that, we did have to wait for this trade for a little bit. However, we did hit that profit target and we did make $1,000 on Monday. Now let's go over to Tuesday and see if another opportunity sets up.
Okay, let's fast forward this to the next day. It's pretty much the same similar thing as the day before. You know, on the Monday it didn't really go anywhere. But now something that I think would be of interest for me, I would be most interested in it breaking through that resistance right there. So if you extend the range, you can see that is also a very strong resistance point. So he picked a pretty good week to demonstrate this strategy because Tesla's been kind of range bound here, and there's a pretty good chance that it would stay range bound. So his strategy, I think, makes sense to do a short play right here. And another interesting thing is that when Tesla did break out of this range, it did it briefly and then it crashed back down. So to me, that indicates a little bit of weakness because once the buyers got up here, the buyers ran out and then the sellers took control and brought it back into range.
See the low of the 5-minute range and we can see the high of the 5-minute range. Once again, we're going to wait for price action to confirm a move to either side and then enter into a trade that we see fit. So right here, what do we see? We see that we try to break above this 5-minute range. Buyers came in, however, sellers were stronger and tried to close it below that 5-minute opening range level. And right after that, we see a very weak inverted hammer candle. Therefore, we can enter into this trade here.
Okay, that makes sense because just like I pointed out here, once it got above that resistance level, the stock was very weak and then it pulled back down. So what I think's happening is that when you have the buyers push it over that level, then you end up having more sellers and buyers, probably because people who bought above that level are a little bit panicky and then they're selling, or yeah, people want to take profits for whatever reason. Maybe a lot of people are break even and they're trying to close out. But for whatever reason, the charts are showing that it is having trouble clearing out all of the sellers or people who want to sell at that level.
Looking for low of day, and our stop loss will simply be a little bit above high of day. This gives us a risk to reward of 3. This means to make $1,000, we would be risking $333. So let's play out this trade here and see what happens. And just like that, Tuesday was a very, very simple day right into the open. We caught this weak price action. We saw near the 5-minute high, and we just rode it all the way down to make our $1,000 profit on the.
So another third case that he didn't mention his realm of possibilities is what happens if it ends up in the middle of the range and never reaches his price target. Because another thing that could happen is you could end up closing out the day where it's somewhere in between. Like, what if it never got below the 237 area and it just kind of hung around the middle and never got to his price target and he never closed out the trade? We just closed it out at the end of the day. So the risk reward, like the reward isn't exactly that 3 to 1, because there's also a good chance that the actual reward that you're going to get is going to be like actually more like 2 to 1 if it doesn't make it all the way to the price target. Okay, so before we go on to Wednesday, let's see what happened the rest of that day. He actually was lucky that it bounced down to where his price target was. And it didn't go all the way down to the support level. It reversed from that low of day here and went back up. So because it bounced up at that resistance, that's actually kind of a bullish sign, and then it broke through. So we finally got more buyers, enough to overwhelm the amount of people who wanted to sell through there, and then it had a pretty wild move. And this is why your stop loss will protect you, especially if you're doing a quick day trading strategy like that, is because look, the move that made up here to 248 is a lot bigger than what his profit target area was down here. Another thing that he's failing to discuss in this technical analysis video are newsworthy events that could affect the stock price and the momentum of trading that day. So for example, the week that he happened to pick to study the Tesla stock actually happens to be the one where they unveiled the Cybertruck and its release and demo. So on that particular day, November 28th, they came out with a press release saying that on November 30th, they were going to have the Cybertruck event. And of course, that's going to bring more volume into trading. People are going to be trying to trade things about the Cybertruck event, but it probably affected the stock in some way. I think the important thing, though, is to know that when news comes out, it's probably going to bring in more buyers or sellers, and you're going to get stronger moves in one direction or the other. Let's go over to Wednesday now. Looking at the longer time horizon, I see here we've got a very interesting level at 247. Let's see, I think this was the day that he was interested in taking a long. And that kind of makes sense because it peaked here above that support resistance level, and there's a good chance it'll hold. As a swing trader, what I would be looking for here is probably what he's going to do, a stop right down there, right below this, and I would be shooting for 257 as my price target.
Here, and then we actually got to retrace for another entry. So there was two potential entries for this specific trade. We can enter into this trade here because once again, similar to Tuesday, we saw that weak candle price action rejection of the top. So we can enter in looking for, once again, that low of day or 5-minute low. And then our stop loss will...
Oh, okay. So he took the short side of the trade here. Okay, yeah. So he tried to short it right here, but I wouldn't have thought that to be a good idea because the fact that it broke above this resistance area is kind of a bullish sign. So I think it would have been pushing through right to the next bullish area. We'll see how that trade worked out for him intraday.
Simply be a little bit above that high once again. This gives us a 3.59 risk to reward trade. This means to make $1,000 we would be risking. Our stop loss will simply be a little bit above that high. Price action rejection of the top. So we can enter in looking for, once again, that low of day or 5-minute low. And then our stop loss will simply be a little bit above that high once again. This gives us a 3.59 risk to reward trade. This means to make $1,000 we would be risking $278 on this trade. So let's play out this trade here. And just like that, we see that we hit our profit target for another $1,000 day. We did have to hold through some consolidation near our stop loss.
I guess he was looking at this as resistance that he was going to short, whereas I'm kind of looking at the low of day to get long and buy it down here. But I actually wouldn't be buying because from a swing trade standpoint, this isn't really a good risk reward. We're just trying to get a little bit towards that descending triangle, and there's a lot more that could fall, so I probably wouldn't want to try to take the trade. So this is very interesting. I would have gotten stopped out, or if I was try swing trading it from this point, I would have stopped out. Okay, so he's at 9:45 on Thursday.
Thursday, we mark out the high and low of the first 5-minute range. Let's see if we can hold or break any of these levels. Right off the bat, we're breaking this 5-minute low. Now, there's two opportunities to play. One would be a retest into this level all the way down for a downside move, or potentially number two is a break back above, using this as fake liquidity, coming back, retesting, and then looking for high of day.
Okay, so let's return to the Thursday morning chart and take a look at how it looked at 10 a.m. As you can see, it fell back down here to that support line. Maybe this would be a good time to go long if you were able to hit it here right at the support line. Let's back it up a little bit and look at the daily chart. And something I don't like here is that when we looked at the Wednesday price action, it actually did come up pretty close to the descending part of the triangle here, just like it did in the previous areas here where it came up to the resistance and then it came back down, it came to resistance, came back down, and is making lower highs. I would kind of expect the same here, where it would probably come right up to here. I would probably expect to see it come down. So I'm kind of expecting a move maybe down right here to, was that like 212? So I probably wouldn't be taking any trades on that Thursday. If any probably a short for a swing trade. Okay, let's continue watching the Thursday trade.
Okay, so we came back above. Unfortunately, this candle, because we're waiting for candle closures, this candle closed above the level. Therefore, the retest to the downside would be invalidated because this candle did close above that level. So now what I would be looking for is a retest to go long.
One thing to keep in mind is that this area where it stopped down here was a level of support. So you probably could have gone long there if you were watching the multiple time frame, but he kind of missed that because he's not looking at multiple time frames, and he's trying to just look at the time frame of range established within that day. So he's going to see if he could find a better entry point, and let's see what he does.
And right here, we do see that retest setting up. We see we came back, we held, buyers are coming in, and we are trying to hold above this level. Therefore, we can look for a long position here, risking below low of day and our profit target at high of day. Now, as you guys can see, this isn't an optimal trade. This trade would only give us a 1.08 risk to reward. You know, in my personal strategies, I like to aim for at least a 2.0 risk to reward. Therefore, for myself, I personally would not take this trade because this does not align with my personal strategy, and my rule is I try to aim for at least a 2R trade. However,
yeah, I agree. With a trading standpoint, that's a pretty lousy entry.
For the sake of this video and transparency, I want to show you if you do take this trade with a 1.08 risk, therefore to make $1,000 on this trade, we would have to risk $925. Let's play out this trade. And as we can see here, this candle unfortunately closed below our level, and therefore we did lose $925 on this trade. Now, I want to mention once again, this was a 1.08 trade, therefore this wasn't an A+ setup for me. However, in this video, because I want to show you the backtesting results of this strategy, it was important to show you this loss. However, like I said, this wouldn't be a trade that I would be taking because the risk to reward is skewed. Now, let's go over to Friday for the final day of the week.
Okay, so I advanced this to December 1st, Friday, and we're going to see what we see on those charts at 10 a.m. Oh, look, it came back down to the support area. So actually, there's multiple support areas. We have this middle range support here. The middle range supports aren't as strong as the ones on the edge. My thesis is kind of playing out here. I don't know. I have the feeling that this is probably going to break. And like I say, as a swing trader, like entering right here in the middle of this triangle is probably not my favorite place to make a bet. I feel it's kind of a coin toss right here, but let's see what he does in his video.
Here we are on Friday. We can see the first 5-minute high and low. Let's play out this trade for the final day. So here we can see on Friday, we came up for the 5-minute. We then held this consolidation here at the lows. We made a move back up. And what we can see is sellers keep trying to bring the stock below this opening 5-minute, right? We can see those wicks coming in and we can see those weak price action candles. Therefore, we can enter into this trade here looking for low of day with our stop loss a little bit above those highs. This would give us a 3.68 risk to reward trade. This means to make $1,000, we would be risking $271. So let's play out this trade and see exactly what happened. Now, unfortunately, this trade did look like it was going to work out, but we did reverse and we broke above our key level and we actually held, so we would be stopped out at that candle right there. And to end off the week, we would be losing $271.
Part of the reason for that craziness, I think, has to do with the fact that it's kind of in the middle of multiple time frame ranges. So you're right in the middle of this triangle here, and like I say, it's kind of unpredictable. We have a few more candles to fill in on the daily chart. Why don't we take a look at them and see what has happened since then, and see if I'm right, whether it has come down to the support here on the baseline. So I'm going to forward to December 8th, which is the most current day that I have available. And I'm going to put this at just after market close at 4 p.m. It's consolidated in that range, so we didn't get that pullback. It actually held up support there. Now, from a swing trading standpoint, if you went short, like around here, you would be good down here, and you would still be good up there. And what's probably going to happen, what I'd be looking for next is probably a breakout. This is actually looking pretty good because it's bumping up the top of that triangle again very soon. But I don't really feel comfortable about making a trade right now. If it starts to go through the triangle, then I might actually be interested in Tesla. But right now, it doesn't really interest me that much from a technical analysis standpoint, which is why I haven't been trading Tesla. As I showed you earlier in the video, I did make the trade from around this point up to here, which was a really good move, but right now I'm not seeing very good risk reward there. But anyway, I hope you found that to be an interesting examination of two different styles of trading and two different ways of looking at the same charts with different trading strategies. If you like this video, please give me a like and subscribe to this channel, and I'll see you in the next video.